I'd like to welcome in our participants, but first, Craig Fuller called and asked and said, hey, John, could you help us run a panel? I want it to be titled From Startup to Market Leader. And I said, Craig, is that a one-on-one with you? It seems a little presumptuous to start. But he goes, no, we have 3 electric business leaders who have built and designed and still lead great businesses, and we'd like to welcome them in right now. First is Mark Yeager, Redwood Logistics. In no such order. Second, Bob Farrell of Global Trans. And last but not least, Chris Hines of Finca Global Holdings. You guys want to take a seat down? Thank you all for joining us. We have 25 minutes, and we are conscious of the fact that this is one of the last content elements before happy hour, so we do want to be on time and help you guys both hear a great content session, but then also get to the happy hour. So with that, we're going to jump right into it. Again, the title of the panel is From Startup to Market Leader, and this will be a live Q&A session. So I'm going to start with the first question being that with a lot of the demos we saw today, these companies are dealing with constrained capital, big growth plans, and seeking to grow large organizations from small and startup bases. Can we talk a little bit about your guys' thoughts on how they can most effectively allocate their capital, accelerate their organic growth, build organizational structures, and grow from an idea into a business model with real fundamentals? Mark, maybe you could start with that?
Sure, John, be happy to. You know, it's a tough question, right? Resource allocation is obviously critical, and there's a lot of places, you know, to put those resources, especially early on. You know, I think it really depends on what you're bringing to market. From my perspective, you know, we have 2 sort of main business lines, and in order for us to drive organic growth, there's sort of 2 different approaches. So our LTL model, highly scalable, right? So it's really about committing resources to marketing and committing resources to sales, because to the extent we can drive that pipeline, you know, we're going to end up with very positive results. Our other large business segment is truckload, right? And truckload's a little bit of a different animal, because really what you need to be able to do there is resource your operation out in front of the potential growth, right? So you've really got to be understanding your pipeline, understanding what's going to translate into real business, and probably being 6 to 12 months out in front of that growth. For a startup, that's a really tough challenge, I think. But as you think about your businesses being young, you know, the reality is you've got to be out there feeding that pipeline, and you've really got to understand what's a bona fide opportunity versus something you just are kind of hoping is going to come on board.
Yeah, that's right. That's great commentary. In just less than 2 years, you've done a phenomenal job. You and your team and your organization have done a phenomenal job building a wonderful business, which we expect to continue on that path.
Yeah, thanks.
Bob, and yourself, you've in similar kind.
It is interesting. As a larger company, we face some of the same challenges that smaller companies face when it comes to the allocation of capital. And I think about it, particularly from a technology perspective, we need to focus our capital, like I think small companies do, on getting the right people. It's a real difficult talent market out there, as many of you know. In smaller businesses, you often have a very passionate founder, someone who has a clear vision of what you're trying to develop. How do you build upon that? How do you get access to those good people? Using your resources to get there, I think capital resources to get there is an important endeavor. Similarly, on the product side, our challenge is we try to bite off more than we can chew in terms of development. And I think us, like smaller companies, would be much better focused on MPV, getting that, you know, MVP, getting that minimum viable product out there so that we can actually start to do something, see what's working. Like Mark, we have a couple of key market segments, so when we're developing technologies, we want to make sure that we're developing those technologies against the things that we actually have business in, as opposed to new areas. So we can develop those things more quickly, get answers back from customers who are already working with us, and find our way to the next level. So I think getting focused on using your resources for talent and developing minimum viable product are 2 things that I would point to.
Yeah, those are great words of wisdom. Thank you for that. And Chris, you've had a strong track record of both building organizations and now taking more of an investor role. Can you talk a little bit about from the latter half of that side, what you see as?
I really believe these are great points that Mark and Bob have made here, and it's a real honor to be with you guys up there as well. Thank you. I think you really have to look at obviously the people piece and obviously the front end of the house. What I've seen in a lot of these startups as they really focus on getting that minimal viable product or getting the product out the door, that they get a little heavy in the development side of the business and they lose sight on the front end of the business. So I think it's really that making that match between keeping my customers, and those first customers that you bring in are very important to the growth of that business. So I think the real key is marrying the front end and the marketing and the sales team and making them equal with the product team in your allocations. And that's not necessarily easy because the product teams tend to grow a little bit faster. So I think the real successful players have added the right customers, very focused on the customer side and very focused on the front end.
Yeah, thank you for that. And I think you ended on some interesting points pertaining to both the customer side and the product side. And we talked a bit about organic growth. Maybe if we talk about inorganic growth here a little bit, any color commentary on how, if you can't organically grow either the product or the customer, is there potentially a best opportunity to acquire one or the other, or potentially both? And in your experiences, what are sort of some of the best ways to go about that and think about that, knowing the balance between doing it internally versus seeking to acquire something externally? Chris, maybe you can start off with that one based on where you left off.
It's really important as you look at the acquisition piece of this, and in the due diligence process, as you're looking for the right company or companies to add to the portfolio, that you in the process you're looking how you can add the things that are in your stack today, and extend those through the customer base of the acquired company. Because that's going to give you organic growth through your product stack, and that's really important. I think that's sometimes missed in the acquisition. It's not just buying more IP, it's not just getting the good people, which are very important, obviously, in the view, but it's how you can push your current products through the new customer base that you're going to acquire.
Chris makes some great points, and I think with thinking about acquisitions, the first place to start is thinking about integration. How well is your culture going to match with the culture of the company you're acquiring? I think it's particularly important when the companies are small. There's a lot of emotion wrapped up in your baby as a founder and the other person's baby as a founder, and how are you going to bring these two things together and have 1 + 1 equal something greater than 2, and hopefully not something less than 2. And it's really difficult to do M&A with smaller companies. When you get it right, though, I think you can really find yourself ahead of the market. And the market is moving so quickly, getting technology developed at a more rapid pace than you would have by yourself, getting more features and functionality and connectivity than you would have gotten by yourself more quickly. I think those are going to do things to help drive your valuation and help you raise money to do more organic growth as time goes on.
Yeah, I'd agree with all of that. I mean, I think, acquisitions are tricky, right? Most of them don't work. Most of them don't bring the kind of benefits that you're hoping for. I think, it's one thing to add scale, right? To add more revenue to a main business line, right? But, at today's multiples, that's probably not enough value that's being brought to the table. It's got to be a cultural fit, to your point, right? The services have to fit in strategically together, right? The organizations have to mesh, and that's all challenging to assess, especially in the due diligence process. We tend to spend way more time in due diligence, looking at numbers, looking at systems, doing conventional due diligence. But really, the thing that makes most deals work or not work is the cultural fit. I know certainly when we look at businesses, we're much more actively, we have a very distinct culture, and we're looking for organizations that aren't necessarily a direct match, but that gel and can mesh together. We're also looking for that good service set that really rounds out what we're offering to our customers. So, we put together a good LTL platform with a good truckload platform, and it opened up two totally new, sets of customers that are now taking advantage of that. Not only does that generate organic growth, but it also generates a much deeper customer relationship, which is, a major strategic benefit. If you're going to pay the kind of multiples that it sort of takes to get good companies out there right now, I think you really have to try to find those kinds of, peripheral or strategic benefits in addition to sort of conventional additive math.
John, I just want to add one thing to, you made me think of it. With small companies, I think the other thing you're dealing with a lot of times is two different venture capital investors, and getting two venture capital investors, and I'm sure there's venture capital guys in the room here today, to agree on a valuation and what the go-forward cap structure is going to look like is really, really difficult. And as an operator of the business, you certainly don't want to be hamstrung by disagreement amongst your new investors. And I think if you're thinking about the M&A side of things as a small company, particularly companies that are VC-backed, figuring out how those investors are going to gel with each other if somebody's not exiting is a really important thing to consider.
Yeah, that's a wonderful caveat. Thank you for that. Being that we're at one of the preeminent freight-related technology venues, I'd be reticent if we didn't ask a question around technology. And given your guys' track records in the space and depth of knowledge in both freight and tech, I'm wondering if we can comment a little bit on how technology has evolved recently and how you may anticipate it to continue to evolve into the future, and how automation piece by piece has become a larger and larger component of optimizing our supply chains and implementing more efficient networks. Any thoughts on that? Bob, maybe we can start with you.
Yeah. We consider ourselves a technology company that happens to move freight. So what that means is everything we do through a technology lens, whether that be on the front end with our customers when we're taking orders, finding capacity, working with tariffs with our LTL carrier partners, anything that we're doing with our shippers around optimization and planning. It's all done through a technology lens. I came into this company a couple of years ago with no freight background. And I sat on a panel like this not too long after I started, and the person to my right said, I've been in freight for 42 years. The person on my left said they've been in freight for 38 years, and the other person said they were in freight for 30 years. And I said, I've been in freight for about 20 minutes. And I think what that's done for me is it's allowed me to ask a lot of questions from a technology perspective that weren't being asked. And I wasn't hamstrung by old thinking around technology. I think that in our space overall, data, the ability to do predictive data analytics, the ability to use business intelligence to find capacity, to understand trends with buyers, to understand trends with our shipper customers, all this is paramount to how we're able to differentiate ourselves. So, in some cases, we're in the market for products like we've seen here on the stage today. In other cases, we feel that we've got to build them. Balancing that build-buy decision is a critical component of what we do every day, and really where the majority of our investment lies from a CapEx perspective.
Yeah, I think that's great commentary. Now, Mark, you had been in freight for longer than 20 minutes prior to joining Redwood. Given that wealth of background, can you comment on how that perspective, coupled with the technology plays that Redwood has, you see to continue involving the space?
Sure. Yeah, absolutely. Yeah, a little bit more than 20 minutes. I think you could put years on there and still be a little short. But no, I mean, and I think that, I remember when, this is going to totally date me, but I remember when we got our first fax machine, right? And how exciting that was, right? That was amazing, right? I thought that was just a miracle. I was about 10 years old at the time, but, nonetheless, the industry really has lagged from a technology perspective historically. We were slow to adapt. We've been slow to get off, AS400 based hardware. We've been slow really to move forward with digitization. Obviously, if you look at this room, that is changing in a fundamental way. And I think we are on the cusp of some amazing breakthroughs. There's still a tremendous amount of inefficiency within the core processes of almost every major transportation company, asset, non-asset. Even the really sophisticated asset guys tend to be really good at analyzing and understanding their assets, right? We aren't really directing our analytical capabilities to our customer in the most effective way. And I think that's going to be a major, breakthrough for the industry and a major breakthrough for the sort of value proposition that we're able to offer, to the shipping public, who in many cases is in a silo, and they don't have resources, and they don't have a TMS, and they don't have analysts on staff. We as an industry need to be able to step up and play that role for our customers, because I think there's a real need. I also think, so I'm very excited about predictive analytics, what we can start to do with data as it aggregates together in truly meaningful ways that we can now work with in a way that we never could, historically. And then I think the other thing that I saw in a lot of these presentations, a lot of discussion about process automation and where we can go there. There's still so much manual work. There's so many inefficiencies inherent in our operational processes. And there's so much activity that isn't being assisted by good, solid, real-time analytics. I think the industry in the next 5 years is going to change fundamentally. It'll change for the better, but it's going to change a lot of, who succeeds and who doesn't within the marketplace.
I think that's right. And I think, Chris, before handing over to you, maybe I piggyback on Mark a little bit. He talked about big data. He talked about automation. He talked about predictive analytics. How can companies use these new data sources, which are being leveraged by the implementation of these new technologies, to have differentiated business intelligence, which helps them make better decisions, helps them do better strategic planning, helps them think about growth differently? Can we talk a little bit about that?
Yeah, I think it's kind of paramount if you watch the presentations that were done today and you look at the companies that are coming out with all of the great stuff around AI. You don't have to go back very far to when you were planning your trucks and you were totally reactive to a marketplace. And you looked at the dry van rate out of the country has dropped by 3 cents. Well, you're 2 weeks later looking at that. You've already lost 2 weeks. You can't make back up. Today, you're down to talking about specific markets and that information in real time so I can move. I think for the asset guys, it's paramount that they're able to react quickly like the startups are. So the larger assets guys now have to attract the talent to develop and react to that information that's real time now, vis-a-vis when you look at it and it was 2 weeks old, you couldn't get that back and you try to move the ship. So it's going to be the real talent challenge, I think, for the larger asset guys to be able to bring in and attract the people to deal with the real-time data that's out there. And you're seeing some wonderful examples of that, during today's 7-minute presentations.
I think that's right.
I think you see so many companies in the space, established players that are really good at handling freight, right? But it's almost as if every day is a new day. And I think what we'll discover with predictive analytics is every day isn't a new day. Yesterday will tell us a lot about what tomorrow is going to be. It's just inevitable, but we haven't really taken advantage of all of that potential learnings to do a better job of planning networks in advance.
Yeah, I think that's right. And pricing freight in a more effective fashion, so it makes sense for all parties.
All the core processes.
To make sure that the brokers are making money and the trucks still want to show up because they're making their return on invested capital, and the shippers are happy because everything is showing up to their DCs.
Yeah, I think we felt the pain of that inefficiency, earlier in the year.
That's correct. And so one closing remark, which I think is very interesting for the demo day participants, to hear sort of advice from you all is what traits do you see as core for the young tech or freight or logistics companies, a combination of the three, looking to become market leaders and thinking about growth and becoming great organizations? Can we opine a little bit on that? Bob, maybe we start with you.
So I think that having been an entrepreneur of a startup myself once upon a time, perseverance is the first thing that comes to mind. Being able to day in and day out get up and challenge yourself to go after your plan, to be out in the market and take the positive comments from the market and your customers and the negative comments and the fact that nobody wants to pay you for anything yet, and just continue to do it. It always amazes me what a few great people can do in a small company, how fast they can develop something, how fast they can catch a market trend, and being able to have that perseverance and succeed, I think is a unique trait, and those with the good ideas and the passion behind that will be successful. And I think there's a lot of companies that are represented here today and will be here tomorrow that personify that.
Yeah, I think that's great commentary. Mark?
Yeah, I would totally agree with the passion comment, and I think it's great, what we've seen here is how much passion is out there, how many really bright, really determined individuals are getting into this business right now. I mean, it's very exciting. I think most companies that really succeed, the core team is very passionate about what they're doing, and they are determined to succeed. They like the business, they like the people that they're working with, and you can feel that, and you can feel the energy in the room, when they present. I would say the flip side of that, the danger for the young entrepreneur, is maintaining focus, right? You don't want to chase things, you don't want to chase rabbits down rabbit holes. It can be tough sometimes to sort of stay the course and not be distracted by the latest shiny object. Pick a path and go get it, and your odds of success are much greater than if you try to pursue with a very thin staff 3 or 4 different directions, and you just end up not making any progress anywhere. And I think if you talk about making the transition from startup to market leader to successful player in the industry, the other thing you've got to do is build depth within your organization. You've got to do all things well. Most young companies gravitate either towards development or operations. You've really got to be good on all fronts, and that means you have to hire people that are capable of stepping up to the next level. You've got to hire folks that are ready that are probably ahead of where you're at as an organization. So I think what you really need to do fairly early in the process is begin thinking about, am I building a team that's capable of taking this business to $500 million or $1 billion? And if not, how do I build that team, and how do I develop the people I have to take on greater responsibilities? Because as you get bigger, you can't do it all yourself as the entrepreneur.
Yeah, I think that's right. Passion, perseverance, organizational design. Chris?
Those are great points, Mark. The thing I see a lot in the entrepreneurs is they're taking to get to the next level, if you will. They love their product because they built it and they're passionate about their product. They love the problems they're solving. That's why they did it. They've also got to keep a real mind in the narrow focus that Mark mentioned, is what customers and partners. You can't partner with everyone. And you see a lot of businesses that get blown up by picking the wrong customer out of the gate. Just because it's big doesn't mean it's shiny. It has to be the right one to help you grow your business and be there to support you. So really, really focus as the leader. You know your product, you know the problem. Make sure you get the first customers you're bringing in are the right ones, or you just can pretty much blow up the house.
Yeah, I think that's great commentary. So for all demo day participants and all future demo day participants, you've heard from some of the market leaders here, passion, perseverance, thinking about growing your organization, hiring the right people, taking care of customers, and doing the right thing to continue to grow the organization are good recipes for success. So with that, thank you all for your time. Thank you all for your time, and I hope you enjoy the remainder of the FreightWaves event. Thank you.